Hi guys, Vindi. Let's quickly look at the gaps. If you are new to this particular channel, make sure that you subscribe for upcoming videos. If you are looking for a holy grail strategy, or you are looking for somebody who's gonna sell you dreams, maybe you have to pass this video, because unfortunately, I'm not one of those people who's gonna tell you what you wanna hear. All right. Um, if you're a returning subscriber, welcome once more. Thank you for coming back. Let's quickly talk about gaps, right? Particularly Monday gaps. So with Monday gaps, without wasting any time, we are looking at Friday close, the Friday close, and the Monday open, or the Sunday open, depending on when your broker opens. Okay, so Friday close and a Monday open, right? So it's just the difference between the Friday close and the Monday open. So most of the times when there is something significant or a fundamental event on a weekend, just because the market is not moving, price tends to create gaps on Monday opens. For instance, let me see if I can move around, check last week Monday. You can see right here we do have a gap. Okay, so this was let me zoom in a bit. Where is that? So this was basically the last uh, candle for Friday, this one right there, and then this was the first um candle for Monday or Sunday. Okay, so we're looking at the Friday close, like I've said, and the Monday open. So if I was to check my rectangle box, the Friday close was that, and then the Monday opened here. So because this is a bullish candle, the market opened lower and closed the high, hence the candle screen. So for red candles, the market is opening high and closing low, just the basic candlestick mathematics there. Okay, so this is a gap that was actually created on that Monday. This is formed between Friday close and the Monday open. So if there's an event between these particular days, price tends to create these gaps on Monday. Okay, so that's very cool. Don't forget to check other videos on the channel, and check other things that I've done, other strategies that you can use. Of course, everything is completely free, and yeah, just scroll through. You can see a bunch of videos that I've created before. You have to combine everything that I've done in order for you to at least have something that is solid. One strategy, unfortunately, doesn't cut it. You need to have more in your toolbox. Okay, so with this particular gap right here, and once you've identified your gap, let's see if maybe we can find another gap, Monday gap. Let's see. Let's see if we can find. Here's another one. So if we look at this one, we had the Friday close up there. It closed bullish, and Monday it opened much lower. Can you see that? So this is another gap that we can actually identify. Now, what are the things that you have to pay attention to when dealing with gaps? Of course, one of the things that you have to look at is the gap size. That's number one. The gap size is very important. You don't want to trade gaps that are very huge. Okay, so what is huge? Obviously, here I'm on 30 minutes. I usually use H1 or 30 minutes for this particular system. Make sure that the gaps that you are having are not super big with respect to surrounding candles. So you can see this gap is almost the same, let's say, range as this as these two candles there. So this is not out of range. This is not super big. Anyway, you can see a very huge gap. You can easily see it on the chart, but in order for you to see that, make sure that you compare the gap with the surrounding candles. And one other thing, check if you're gonna be comfortable risking the amount equivalent to the gap. Okay, check if you are comfortable risking the amount equivalent to the gap size. All right, if let's say this was 100 pips, are you comfortable risking 100 pips? Of course, do check another video that I made about calculating your risk to reward, and yeah, it will be able to assist you with that position calculating, and yeah, all those things. All right, so check if you are comfortable with this. It will make sense when we continue with this particular system. It will make sense why you want to check if the gap size, you're comfortable with the gap size as far as the risk is concerned. Okay, that's another thing. You don't want to trade gaps that are extremely huge. You don't want to trade gaps that are very, very big. And yeah, all right. And then another thing, the location of the gap. Obviously, with location, when we're dealing with charts, we're looking at two things: support or resistance. Where is this gap forming? Because remember, as much as this is a gap, we still want to actually check trades on structure. Okay, of course, some of the gaps they tend to form part of let me see if I can do this. Sometimes a gap can form part of a breakout. It could be a breakout gap, or it could be a retest gap. I might teach about this on the other side, so do check out the Telegram channel. So you should be able to find the channel there. Okay, that's when I will put, that's where I'm gonna put other videos. Yes, that's a gap. Let's see if we can find another one quick. Can we find another gap? There we go. Here's another one. Friday close, Monday open. That's a gap. Okay, so how do we now wanna trade these particular gaps? All right, so what I'm going to do here is very, very easy. I believe even a 2-year-old kid can be able to do this. This is very, very easy, but make sure that your gaps are on structure, okay, and your gaps are not too big. So the size of the gap is very important. And the downside of this thing is actually poor risk to reward ratio. Basically, you are looking at a 1:1 risk to reward ratio. Nothing more than that. Okay, nothing more than that. So, what you want to do first, when the market opens, obviously you're not gonna see a bunch of candles. The only thing that you're gonna see it's just a line. Let's say maybe if price was to open, the market was to open down here. All right, the only thing that I will see is this price line down here. I won't see a bunch of candles. I will just see this price line down here. So what I have to do, obviously, the first thing is to mark this Friday close. Suppose price was to open low, and then we mark the new open. Okay, the difference between that. We're actually marking the gap. All right, that's the first step. First step is to do what? Mark the gap. When you are done with marking the gap, double tap on that box. You can see now it's highlighted. There's smaller and a ball there in the middle. And then hold control, drag. So what we're doing here, we are duplicating the box. So ask yourself, do I want to buy or sell this box? Okay. Do I want to buy or sell the gap rather? Am I closing the gap? Since we're closing the gap, we drag this box to the other side of the gap. Remember the gap, by the time price opens here, the gap will be upside there. So we want to move, put the other box on the other side. So the duplicate of that, we want to put it there. So when you are done, this is everything. So if this was a box, we're actually gonna do this. We're actually gonna buy there. This is on structure, some sort of structure there. Okay, and then put your stop loss on the other side. Now it should make sense why I was saying that you should be comfortable with risking this amount of the gap, because this is gonna give you a 1:1. Simple, easy. You don't have to wait for a confirmation signal or whatever the case is. Okay, as long as the gap is not significantly big, you can be able to do this. The stop loss is sitting on the other side. Take profit, obviously it's up here. You can of course um use another take profit as well, but the first take profit should be equivalent to the gap. That's why I said this is a 1:1 shandies. Okay, but if the gap is forming much lower, you find that price and closes the gap and moves up just like that. Okay, and creates what I call the Monday daily gap. Can maybe I will teach about that some other time. Let me know in the comment section down below if you would like me to look at that particular concept. Okay, so this is actually how you want to do the gap. First of all, you measure the gap, and then you duplicate this box to the other side opposing the gap. Let's see if we can find, look at another one. Here's the gap here. This is measured. So what we want to do, we duplicate this box. Since the gap was to the upside, we move it down there. This is where the stop loss is gonna be. That's last week Monday gap. I actually took this and got stopped out. Yes, I got stopped out, and I'm not ashamed of that. Okay, so same thing. So you're buying at that specific price. Things that you have to note once more: the spreads at that time will be going nuts. So that's when you need a good broker that won't give you some weird spreads and all those things. Check down some of the brokers that I use in the description box below, particularly for Nasdaq. If you're looking for a broker that you can use 0.01 as your micro lot rather, check the link in the description box below, and then you'll be able to chow that in nicely. Okay, so I got stopped out. The stop loss was somewhere down here. You can see got stopped out, and then price reversed. Okay, and then went back up. So this was a fail. Okay, this was a fail. Let me show you another one. This one right here. So the gap in this case opposing, the gap is in the upside direction. So what you want to do is to duplicate this box on the other side. Hold control, move that, and then this is where the stop loss was. Okay, stop loss there. You can see this gap went up nicely and hit TP nicely. Okay, so that's another one. So this, what I like about this is that it has like a high win rate, but the risk to reward ratio is it's just that. Here's another one that I marked earlier. Duplicate the box to the other side. Since the gap will be up here, before everything prints, the gap will be upside. So just do this, and then do, okay, this is the stop level. It's the opposite. Okay, but you understand, the red one is the stop loss, and then the green one is actually the target. And notice how the ones that are working out nicely, it's when price is down, 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 down here. But you need some sort of a reference as far as structure is concerned down here, because it's much easier to actually close that gap if it's sitting on a extreme high or extreme low. It's much easier to close the gap. Okay, because already price, you find that it's exhausted. So if you're using your RSIs and your, what you call, any sort of oscillator that's giving you an overbought, oversold condition, you should be able to actually see those conditions being fulfilled. Okay, so that's actually how you use this particular system. Easy, 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 nothing complex. Very, 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 very easy. So here's another one. Friday closed there, and then here's another gap. But what's wrong with this one? It's too small. Okay, so you'll end up paying more for spreads. So we're gonna ignore that, including this one as well. Even that one, we're gonna ignore. Some of these ones, they are not Monday gaps. They're actually forming during the week between session close. Okay, so if you check this one once more, Friday close, then we had Monday open there. There we go. That's a gap. Then you duplicate this thing, hold control. See, hold control to the upside. There we go. And then that's the whole gap there. That's the whole gap, the entire gap. Okay, so you can see price attempted stop loss there, TP down here. Big TP even went down. If you notice, this gap was just extremely high with respect to previous structures. So obviously, price closed the gap and moved even lower. So depending on how you're managing your position, you will actually, you can even get more out of this, but the minimum obviously is 1:1 risk to reward, of course. So yeah, these are the things that I wanted to show you. If you like this video, go ahead and test. You can see another one there was closed nicely. Go ahead and look at other things, but remember what I said it's very important for you to understand the kind of gaps that you are trying to actually take positions on. Make sure that the gaps are not extremely big. Make sure that the gaps are reasonable. Can you use this only on Nasdaq? Hell no. You can use this even on currencies. You can use this on currencies. I have to repeat, you can use this on currencies as well. Okay, but check the size of the gap, because some of these gaps are driven by very huge, weird, fundamental events. Of course, like stuff like the pandemic that's going on now, gaps like that are driven by those states. We don't want to go go against them. But this is the simplest way. Just remember those things that I've mentioned: the size of the gap, the location of the gap. You can see most of the gaps that are working out are actually located on extreme highs or extreme lows, or they're forming some sort of richest gaps like this one right here. You can see price closed there. Let me just show you. See, it's the richest gap. So if you were to look at that, price broke out, went up, and then it gapped, came back to retest. Okay, so that push for closing the gap was just price continuing to in the upward direction. So do look out for stuff like that. If you like this video, don't hesitate, share with others, share on other groups, and share on Facebook. I believe there's a Vindi Facebook page on Instagram channel. Just search for Vindi Forex. Everyone should be able to find that. But I doubt if those things are active, because unfortunately I'm not a social media person. But yeah, do go ahead and follow those pages. Don't forget to also follow the Telegram channel. And yeah, I believe this is it. I don't have anything to add, although there is more that I can add to make this whole system robust. But do watch other videos in order to see if you can combine with other things. I mean, there's a lot of videos on these channels, not too much, but all of them, I believe you are going to learn one or two things. All right. Otherwise, sharp sharp.